Alrighty traders, hello everyone, John Howell here. Today we're going to be looking at all the markets, and my goodness, there's a massive shift going on in the markets right now, right? I'm going to share with you about gold. Gold actually had the exact same move that gold's doing right now, actually happened before the '08 crash. I'm going to share with you exactly what that is. Give you an update on silver as well too, also an update across the actual stock market as well too, and also the mining sector. There's a massive shift that's happening right now underneath people's feet. And if you've been following me now for quite some time, you would know that I've been really focused on these sectors in the markets because there's a massive rotational shift, and I want to share with you exactly why that is. So let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so let's get started. Let's actually start off with the good old stock market. I'll show you a bit of some short-term TA in the stock market. And some technical analysis. And also, guys, I want to share with you some things that might help you when it comes to your trading, when it comes to success in the markets, okay? So let's actually get into this right now. So let's actually start off with the S&P 500. I'm going to be looking at some technical analysis here. And the big thing that I'm noticing right now is, let me show you this here. So you would notice this here. You would notice what's happening with the S&P 500. But if I go down to, let's actually go to the 3-hour chart. One thing you're noticing with the S&P 500, check this out. You know that, see this was the double top here, right? So see that double top there? So that was a double top, right? And then that's the neckline. And it actually came down and actually hit the target there. Makes sense so far, okay? So what I'm noticing right now is I'm noticing that we have this level of support level through here. And now we've actually got this whole maybe conjunction, because it's not a finite level, right? It's like some people say, okay, what's the number? I'm laughing because every time I say that, there was someone in the chat box that said, if I say there's a good support level here, someone said, John, some people are feeding the cats. So please tell me the number. Oh my goodness. Anyway, so the whole thing about looking at that is that I find a lot of times it's actually not a finite. It's not like it's 5,248. I generally find that not to be the case, right? I always find it's more like an area, right? I'm more like and people call it zones, whatever, right? Just there's an area of level of support and resistance level there, right? So, and I'm saying whatever because some people just make it too complicated. So we can see that there's a level of support level through here. And if I draw it up, if I'm looking at the levels of what's happening right now, is this would be this. This this would be that. There you go. What's your number? Oh, geez. Anyway, what a start to a video, eh? Happy Monday, guys. So, all resistance all through here. We have found support. We had a little bit of a conjunction here, but look what's happening here now. All right, so this is really important to see what's happening here because look what's happened. The candle came all the way down. Yesterday came up and did this. Now remember, guys, when we actually start to see downward legs, what happens in bear markets especially, now we're not in a bear market. This is just a normal correction, normal pullback, normal drop in an overall swing in the market, okay? The overall swing in the market. So that's what that's what I'm seeing through there. So the purpose of me saying that is that I do believe that we tend to get very sharp snapbacks in downward legs. So I go down, sharp snapback, down. So looking at this level through here, if I go to the hourly chart now, you'll know this is more like a do or die territory for the S&P 500. Because we're right at this level here, right? Now on the hourly chart, we can see what? We can see how this whole level here is a what? A massive level of resistance, all through here, right? And then we have this resistance all through here as well too. And then we have this resistance all through here. So why is that important? Okay, that's important because we see we're actually holding it for the last 1, 2, 3 hours of the market closing last week. We saw what? We saw it actually holding strong, right? Now, check this out. So if we do this, and we see this, if we start to get this and then a breaking below that level there, that tells me now, what does that tell me? Think about this here for a minute, okay? In my personal trading system, I have 5 rules. And my rule number one is always, what's the trend? What is the trend in the markets? Okay. Because we can have no trend, which is more like here, up, high, double bottom, double top, triple bottom, triple top. You see what I'm saying there, right? No one's in control. And then we start to do that there. So we look at that, right? So when we're looking at this level through here and all this point through here, guess what? We had this 5,180 level, or there's the number for you. If you're feeding your cat, you know what the number is now. Oh, man. Alrighty. I'm excited, guys. I'm excited. If you can't tell, I'm really, 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 really excited. This year, guys, and the reason I'm excited, just quickly, is because this year has been one phenomenal trading year for me. I haven't actually taken a lot of trades, but the trades I have taken have been really, really, really successful. Like, I don't remember the last time I had a loss, which was a small loss, I think it was back in January. Like, that's the last time I actually had a loss in the markets. Now, again, I'm not an active trader. I'm of a sniper approach. And if you know my sort of stuff, again, I'm actually giving away a 7-day free trial to the Master Trader Lab. First link in the description. Or I'm just giving away a free access to my breakthrough trading course for free. And that's that link in the description there. I'm personally saying that you can actually go learn my trading system within that sort of stuff there. But yeah, just for me, guys, I'm like, again, I'm not an active trader, but I'm more like a sniper approach. I'm waiting for precise times. And if you saw my gold trade, right, and look what happened in gold just recently as well too, right? It's just massive, right? I'm like that. I'm like, when it comes to like an identification, like a gold trade, where I can get in and hold for like what? For a month or two and capitalize on a big profit. I'd rather hop on one good trade like gold than try to jump in every little thing that I think is going to make a small little profit. Makes sense, right? Because what's going to make you more profits? 20 small little trades that potentially going to equal small little trades, potentially even much bigger losses, or one really good trade. Okay, so that's the way that I like to do it. And I'm just excited because this year, excited, humble, and grateful that this year has been a phenomenal year. And on top of that, I've been able to coach my clients every day, because I'm with them every day, on patience out, waiting for good setups. And then when we're in good setups, being patient and just allowing the trade unfold. It's been so grateful that not only, this year's been an amazing year for me so far, but I've been able to coach and guide other people through the process of not jumping out too quickly, and guiding them through that whole process there. So anyway, so we can see what's happening through here. And the reason why I'm saying this is that because if we start to get a bit of a down day like that there, then we're probably going to come back down to at least this level through here. Okay. Which would be what? Which would be now what? Almost a double top, low, lower low. This would be a lower high, right? So what's happening here? Double top, triple top, down, lower high. See how things are changing through here, right? We went from sideways to lower low, lower high, and potentially get something. So this actually could be the start of that downward trend, okay? So let's go to the daily charts now. Let's actually look at the Dow Jones. Now the Dow Jones is the big one. The Dow Jones is one that's looking really clear, that I do see that this is probably going to be, we're probably going to see an early move on the downside this week. And what happened last week is probably a little bit of a shake and bake to freak people out. And then away we go to the downside, right? So if we look at this here, let me bring up the last 3 months worth of data, okay? And we can see what? We can see this whole level through here. Once again, see that level through there? And it didn't even get up to that level there. Now, one thing it did do is, one thing I've noticed is, whenever I look at strong bars, I always look at 50% of that bar. Now, what I mean by that is this, okay? This is a bit more of advanced stuff here, but let me show you here. Especially when I'm managing a really big trade, and a big trade. What I mean by like a long-term trade, I'm always, again, I'm getting advanced here on you here, but I'm always analyzing the actual candlesticks to see what it means. And no, I'm not looking at candlestick patterns. I'm not looking at there's a bullish army or bearish engulfing or the shooting star or the hammer. None of that, okay? It's a different type of form of analysis with the markets that I don't think most people understand. But I do, because of my mentor that taught me for the last 10 years or more through these techniques. So if we have this bar open to close, right? It's said to say roughly 50% of this bar is a significant level. And what can happen a lot of the times is that if we have an up bar like this, it'll come back down, find support, and then it'll rally back up. But then if it breaks that level of 50%, then guess what? When it does break it, we're set to actually then completely retrace it. So this 50% level of this bar is really significant in the markets. And same for the downside, right? Same for the downside. If we had a bar or a candle that looked like that, right? Roughly 50% is a significant level in the markets. Now again, guys, this is when it comes to me just reading the markets, what's happening now, but also it's very important. And it's what's helped me stay in gold all this time for the last month. When it comes down to to the gold market. Okay, so it's really important that we're seeing this. And again, I'm teaching you a bit more advanced style of technical analysis here. And the reason why I'm bringing this up here right now, because I'm trying to see, okay, we're in the stock market right now. Is this indeed a bit of a top, or is this or is this just a sideways movement before we have another big move to the upside? Because no one really knows, right? But we can use some simple analysis and some simple techniques. Like then, I'm looking at this level here right now, and if certain things happen, that means we're not going to go down. And if certain things happen, that means we're going to go down. Let me explain what I'm saying here. So this 50% level of this bar, okay, so this is the open up here, and this is the close down here, 50%. Why is that important? Because if we look at the bar today, okay, this is really important. You'll notice this level through here, okay? Notice what? Notice this big up candle through here. Right, see that big up candle there? Where did it come? It actually ran up, came back down, found support at 50%, came back up, and then guess what? As soon as it broke down, past 50%, pretty much came down to where? Pretty much came down to almost 100% of the bar. Then we guess what? Then we had a bit more follow through, right? So this 50% level I held here once, but then it actually closed down. This was actually a bit of a sign here. Oh, by the way, guys, this here is probably a bit of a breakaway gap. Breakaway gap as in like it's breaking away. It's now starting a new move to the downside. So the purpose of bringing this up for you guys is I'm looking at this level here, okay? And the big thing I'm noticing is what? 50% level, right? Now, where is 50%? 50% is what? And this is just, now why am I utilizing this level here, okay? Again, I'm teaching you techniques here because I'm trying to see what is this? And the bars will tell me, right? The bars and the candlesticks will tell me what actually is this? And so right now, remember, I'm utilizing 50% because this is the 50% level. And now what is that also? That also you can see here that we had today was a rally to the upside, right? And then we hit the level here around that. You can see that 50 around, actually that's roughly around 50% of the level there. In fact, if I did a open the close, look at that there. Isn't that pretty amazing? Remember I said 50%? Look at this. That's right smack on that 50% and then rejected it. Okay? Again, guys, like when it comes to what I do, I can really teach you some really powerful stuff that most people just don't understand about these markets, but that truly make a big difference, right? Not just some airy fairy fluff crap, right? But truly make a big difference, as in like, this is the sort of techniques that I use to help me stay in gold this entire time before the actual breakout actually really started to happen, right? And you guys that follow me now for the last few months, you guys would know that. It's just utilizing this sort of techniques here. So we can see 50% level. Now, why is this important? Okay, let me take this off the screen. Now, why is this important? Firstly, because it tells us that if we do suddenly get something like that coming up there, what does that mean? It's now like, it's the momentum is now completely reversed, and then we're probably going to have another move back to the upside, right? That's the first scenario that I'm looking for. What happens today? Do we end up getting another down candle like this, where it opens and we get down candle like that, and then we get down candle like that, right? 50% level actually held. This is a very significant level in the markets that I'm watching for when it comes to the Dow Jones on that level there. So there we go, traders. It's a bit more of a, again, just looking at technical analysis from support and resistance, but I'm always utilizing, especially strong candles like this here, I'm always utilizing the 50% level because it really is important from there. And let me show you, I'll give you an example of one of the things that actually made me stay in the actual gold market You know, and what's kept me in this gold market this entire time. Something I haven't shared on YouTube, but I've talked about this with my clients, is if I go to the weekly chart, remember I said before the 50% level. So I was watching this, okay? And as you guys know, that I've been in gold, you know, before the actual breakout really happened, and I've been in it now for just over a month, and I've capitalized on this entire move. And so have me and my clients. So anyway, the purpose of me saying that, see this big up candle here? Remember I said 50%? So I was watching this week here, and I'm like, okay, cool. This is the week here. Now remember, it's the same terminology, right? Around 50% level. Now what is that? That's the, you know, if you have the open and you have this whole level through here. So that's the 50% level there. If it does come, it may come back down to 50% level here and then bounce up and then continue up there, right? That can happen. That's actually a pretty strong, still very, very strong momentum. But I wanted to see, what does this weekly candle look like? Because this is a strong handle. And this is roughly around 50% of the level there, right? That's roughly around 50% level. Notice this here, it only actually went down to around about 25% of the candle and held. This is something that I didn't talk about on YouTube, but I'm talking about it now, is that back when this was happening and the market was going sideways, I was watching to see what was happening on the weekly chart too, utilizing this one technique. And this one technique, because we only had a small little down red candle on the weekly chart and it didn't even get anywhere near the 50%, it was showing me that there's still a lot of strong momentum here. Now, if we did end up getting a down week like this level through here, that would have told me what? If we did get something like this, we got something like that through there, this week here. That would have told me that we're now probably going to get a move back down to this level here. And I need to be out of gold. Right? So again, I'm utilizing this. Now, why am I utilizing this? Because it actually held the 50% level here, it showed me that it was likely to what? Continue. The momentum's still strong because it held the 50% level of this big, strong candle here. So anyway, there's your class in your session there, guys. Again, there's so much that I can teach you guys when it comes to reading these markets. And as you can see, right, this has nothing to do with the indicators. There's so much power in understanding the actual market itself. And when you start to really analyze the way that I trade, is that I'm reading the market from the right, because it's the indicators are derivative of the thing, right? The indicators indicators can give you a bit of guidance, but I haven't found them to be really, really good sort of entry tools and so on and so forth. But when you start to understand a bit more about the in-depth of how these markets truly work, exactly what I'm teaching you here, you'll be able to start to utilize these things as getting in, but then also management to say, you know, the market's telling me right now this actually could just hold because it's holding above the 50% before we see another move to the upside. Make sense, guys? So that's what I'm seeing through there on the that's what I'm seeing there on the indices, but I want to share with you an example of what it actually looked like on the charts. And the reason this was one of the reasons what actually kept me holding into gold instead of getting out fast. And again, this is the stuff that I'll teach my clients because I'm with my clients every single day. And it's something that I'm really, really, really guiding them through. So as we're going through this sideways period here with gold, right, I was saying to my clients, no, because remember, I was also focusing on that weekly chart because the weekly chart was giving the big picture. I'm like, we're probably going to go for a second move. And I even did a video saying second move coming. And this is exactly what happened there. So I hope you can see also two traders when it comes to gold. Now, this is what's happening with gold right now. I hope you can see two traders that you don't need a lot of good trades, right? I think a lot of people are trying to jump in, jump out, right? I know some people that did get in here, but then they got out here, and they've missed out on all this profit here, right? And now they because they missed out on that, they're gonna go trade some other what? BS, and then they're gonna lose money because now they're getting FOMO for missing out on this second move. Where me, just nice, calm, easy. Not trading, bam, good trade, up. Okay, let's manage it. Let's see what's going on. Manage it. Okay, we're holding strong. Okay, weekly charts. Okay, we're probably going to go for a second move and then bam, away we go again. Okay, just that's all it is, right? That's all it is. So one thing I do want to talk to you about is, let's actually bring up that weekly chart once again. And I want to bring this up from a perspective of what happened in 08 to what's happening now. Now this here, that point there to there, is what? is just before the '08 crash. And then, yes, we did get a crash. Okay? But look what happened. Sideways into the '08 period, and then we had the big crash. Sideways, or possibly even just sideways, big move up. Is gold signaling a new recession coming very soon? Now, we know one's going to come soon, right? We know the recession is going to come soon, but it's interesting to see what gold did before the '08 crash. Gold had a very big move before the '08 crash, and then the '08 crash happened, so on and so forth. Now, by the way, guys, a crash sounds bad, right? A crash sounds, I was actually speaking with someone just recently about the crash. Like, a crash sounds really bad. No, bring on the crash. Bring on the recession. Why? Do you know how amazing it is to trade a bear market? Oh my goodness. You think gold's a good trade? You ain't seen nothing yet in a bear market. Why? Because you trade put options, you trade short, you trade on the way down. And guess what happens? When we're in a downward market, things happen quicker, volatility picks up. Oh my goodness. So people are worried about the recession and all this sort of stuff. It's like, no, bring it on, because the bear market produces so many amazing opportunities. And once again, you think gold is a big move. Bring on the recession. That's where the big money is really going to be made, right? Like, we're talking really good, or I shouldn't say big money, but like really good money is when we're talking about like the recession and so on and so forth. Once you understand that process of going short and put options and so on and so forth, guys, who cares about the recession? Recession coming so bad. Now, by the way, guys, when it comes to a recession, think about this for a minute. I always think about this in terms, right? So when we're looking at the recession, unemployment goes to what? 5%? 7% maybe, right? It's pretty high, right? But that still means over 90% of people are still employed. So when we think about it, right? And the reason why I'm bringing this up, because some people can get so emotionally fearful about recession coming so bad, so good, right? So good. Why so good? What I said before about trading bear markets, so on and so forth, right? But it's still like, when you think about it, it's like, recession, right? And that's what we see in the markets, right? We see this whole process of, it's like, when we think about it, it's like, it sounds really bad, right? And a recession sounds like, oh my goodness, the market's going to collapse and so on and so forth. Now, again, market collapse, good. Let's bring it on, as I said before. But secondly, I want to try to neutralize your journey about the way we emotionally get entrained into these markets, right? And think about, oh my goodness, emotional layoffs. That's it. It's all over. Yet still over 90% of people are still employed. Still, the economy is still ticking over. Transactions are still happening. Things are happening. And so some people are going to say, yeah, John, that's going to happen. But what happens in the next recession when everything gets locked up and the Fed can't do anything about it? What you think? You think the Fed's not going to do one big massive more round of QE? Have you studied history? History gives that 100% certainty. So in the next recession that's coming, this year, next year, when? I don't know. I hope it's today. It's like, it sounds so bad, doesn't it? Bring on the recession today. Bring on the crash today. And when we're looking at that, right, it's all about just trying to remove the emotion, right, of looking at these markets and trading these markets in that way. Anyway, there's a bit of a tangent for you guys. I want to share with you guys, just to finish this off here, when it comes to gold mining stocks here, especially things like the GDXJ. There's a massive change here, and I'm seeing this level through here, right? So I'm checking this out. Check this out. Resistance. Now we are completely now in a change. This is the changing. There's a changing tune in the markets right now, and people are still not seeing it. Rule number one, what's the trend? We have no one in control, someone in control, trend reversals. Okay? A trend reversal is what? A trend reversal is when the market goes down, lower high, right? And then we could come up and then make a higher low, and then we start to get what? Trend reversal. Haha. Now, in a downward trend, the most important part is a lower high. As long as we're making lower highs, the market rally up, make a lower high, rally up, make a lower high, rally up, make a lower high. We're in a downward trend, right? And this is where a lot of people, when they start to see these moves up, oh my goodness, it's going back up, and then we drop again. Oh my goodness, it's going back up. But when we start to see like what's the trend here? Because a lot of the times these moves up get knocked down, moves up get knocked down, right? But then there's trend change warning. Trend change warning can also be when we start to break the high. If we break the high, we need to be making lower highs for a downward trend. And since we don't make a lower high, we actually broke up. Now we're going to make a higher high. Guess what? Now we're starting to see a potential trend change warning. And then guess what? And then we come back down through to here, create a higher low, and then away we go. Why is that important? Look at the GDXJ. Look at that breakout. So that breakout tells me that now, as you can see, we closed above that level there. Let me zoom right in here so you can see it. Right, there we go. Look what happened. We closed right above that high level there. What does that actually mean? The market doesn't do this for no reason, okay? Things are changing. And so that tells me that we may have a little bit more upside because there's a little bit... there you go. We may have a little bit more upside to come. But looking at this level here, when we do start to eventually get that pullback, like we may have another up week through here. And then we come back down through here. And then here we go, right? Then here we go. And as you can see, guys, right, like we can always be trying to pick bottoms, but to me, when it comes to my trading opportunities anyway, I'm always trying to utilize just looking at the charts itself. So as you can see on the big weekly charts, we are really starting. There's been a massive shift that's happening right now underneath people's feet. And guess what? People are still focusing on what? The AI stocks. They're focusing on the Bitcoin. And sneakily, if you've been watching my YouTube video now for this entire year, you would know my main thing has been like, get ready for gold, get ready for gold, forget Bitcoin, get ready for gold. And I've led you down the right path because you've been trying to get in Bitcoin for the last month. You're frustrated, right? You got in the gold in the last month, winner, chicken dinner, right? So I'm leading you down I'm trying to guide you guys down the right path. So anyway, traders, that is it for me today. There's a bit of a wrap for today. There's a lot of things happening right now, guys. And all I do say is that I hope you know what you are looking for. I hope you know what you are looking for when it comes to a really good quality setup, because there's going to be so many amazing setups right in front of your face. And if you are not educated on what a high quality, amazing quality setup looks like, which I do teach in my programs, linked below and so on and so forth, then there's going to be really good trades that's going to appear right in front of your face, but you're going to miss out on it. A lot of people missed out on the gold trade because they didn't know what to look for. How much money have you missed out on just with gold? I'm telling you right now, it could potentially be up to 6 figures now, right? Especially when you start to utilize options and so on and so forth, right? You start to put a bit of money on there, like, $50,000. I know that sounds pretty crazy, guys, but like, a $10,000, $20,000 investment is now worth over a $50,000 profit. Now, anyway, so like I'm trying to share with you guys is like, how much money are you losing because of this? And people trying to make 6 figures a year, but a $10,000 or $20,000 trade on gold has made over 50% of your goal if it was 6 figures a year just in one trade. And now the purpose of me saying that is that if you continue to if you're spending all your time going to the markets trading, but having no process of what actually a good quality setup looks like, you're missing out on some amazing trades from there. You really, really, really are. And you're never going to really get ahead, right? Because once again, amazing high quality trades, just like gold, are happening right now. And all I'm waiting is for my trigger point, my entry candle, my entry point. And there's going to be there's amazing setups happening all the time. But you just got to know what to look for. And again, that's what those programs are there below. And even if you don't want to invest in anything I do, guys, that second link in the description is an actual free trading course. Get the free help. Just get the help you need. Because if you don't make money this year, it's your own fault. You didn't get the proper education. You weren't disciplined enough. It is your own fault, right? You were impatient. You wanted to trade every single day because you thought the more I trade, the more money I make, right? Which we know is the biggest myth out there, right? And you're seeing these YouTube videos of people trading every day. Oh, look, I made $60 here. Oh, look, I made $250 here. Oh, look, I made $1,000 here. Who gives a shit about that? How about we start to look for utilizing trades that potentially can do 10, 15, 50, $100,000 profit? You know what I mean? Like, let's actually talk about some big, let's actually talk about what it takes to become a really, really big trader, right? Not these $20 here and so on and so forth, right? And that's what I want for you. If you seriously want to start to get into the 6 and then eventually a 7-figure range, we must start thinking like that trader. Not like I'm trying to make $250 today. No. You're looking for a trade that if you put 10 grand in today or even 5 grand, it could potentially be worth $15,000, $20,000 in a month from now. How many of those trades do you need throughout the entire year for you to hit your 6 figures? Now, yes, you're going to have some losses, so on and so forth. I'm trying to give you a bit of a blatant statement of why most people struggle in the markets. It's the way they think about the markets, right? So if you're struggling right now in the markets, I know the reasons why, and some of the reasons why I'm saying through here. And again, if you're spending all your time trading the markets, but you have no idea what you're doing, you don't even know what a high quality setup looks like. So when it comes around, you know what to do with it. It's going to completely miss you by, and you're missing out on these amazing opportunities. I'm telling you right now, one of the best things that I've ever done is learning how to identify what are the amazing, powerful patterns and entry candles off that pattern that produce really, really, really big returns.